Welcome to Blue Wave Profit. So I'm going to take you through the analysis for GBP and currently GBP is selling, as you can see. When the market closed last week, that is on Friday, the pair was actually selling and was very bearish. So today I want to take us through what impacted that bearish move. So let's move to the daily time frame and we are going to start our analysis from there. Yes, so here we have some model. We have some model right here. So let's just begin from down here. Down here, as you can see that the market is breaking. The market is breaking structures to the upper side, and the breakout structures are very consistent. And you can see we are also able to find some extreme demand zones and make our entries to the longer side. So when the market reached at 208 zone, there was a change of character. We can see that. Let me delete this so that we only have the skeleton market structure shifts. Yeah, so you can see the change of character. And if you zoom out to our extreme high here, the all-time high, we can see that we have several zones that we're looking into. When the market comes back to the supply, we can sell. So we have the first zone is that marked with the rectangular box. Then the other zone is that one marked with the straight line. We can also add another zone here, right here. Okay, so before we continue, the valid zone that I usually consider as my supply or my demand is when I see a bearish engulfing candle for a bearish sentiment and a bullish engulfing candle for a bullish sentiment. So let us look here. We have that bearish engulfing candle. We also have another bearish, and we also have another bearish engulfing candle. So for me, I consider using the most extreme end. So I will consider using the second one and the first one. So when we come back, let us see how the market is reacting as it retraces towards that supply. So we can see the market is consolidating, and that particular pace, we call it accumulation. We all know that the zigzag movement, either up, down, or horizontal, that is the accumulation phase. And whenever you see an accumulation phase, you should expect a manipulation to happen, meaning all the liquidities that are formed are supposed to be taken out before the market moves to the direction intended. So we can see after the accumulation phase, we see that the market, let me delete this, let me make this one come to this other side. Yeah, so you can see after this phase right here, you can see that the market pushed up and started to sell immediately, meaning that is the manipulation phase. All the liquidity that were formed during the accumulation phase are already taken out, and now the market want to realign into the initial trend that was formed due to this change of character. So now what we are supposed to do is to confirm our entry points in the lower time frame. So we are going to look at the 4 hour time frame. We look at the 1 hour, 15 minutes, and lastly the 5-minute time frame. So let us move to the 4-hour time frame. So right now we are in our 4-hour time frame right here. So we are in our 4-hour time frame. Now let us take a keen look right here. So in our 4-hour time frame, you can see that there are several rejections. The market pushes up, and the 4-hour candle pushes up, it gets rejected immediately. It pushes up, it gets rejected, it pushes up, and it gets rejected. And I see that for me to consider my candlestick as an order block, it should be a bearish engulfing candle or a bullish engulfing candle. So now here we have the sorry for that. So now if you look here, we have our bearish engulfing candle right here, and you can see the second candle comes and does that thing that ICT, the CRT module does. So the second candle does that CRT concept. It comes, fills the whole body of that candle, meaning this order block is no longer valid. So we are going to look into the second order block. So we have here the next order block, which is here. So this zone, the market has not come to it yet. Now what we are meaning to look is confirm if there is a change of character in the low time frame, so that we can look into the market coming to those zones before pushing lower. So let us move to 1 hour time frame. Yes, so right here now we are at the 1 hour time frame. Now in the 1 hour time frame, you can see the market was progressively moving to the upper side, and you can mark the current breakout structure, which is here. This is the last bullish breakout structure. Then after that, immediately the market formed here a change of character. That is a bearish change of character. Now after our bearish change of character, you can see that the market is progressively selling to the lower side. We have another bearish breakout structure right here. However, if you go to the 50-minute time frame, you're going to see it more clear. So as for me, as a swing trader and as a day trader as well, I do both. I usually confirm my entries from the 15-minute time frame. So let us look at 15-minute time frame right there. So if you go to our 15, sorry for this. This was a breakout structure, not a change of character. A breakout structure, yes. So if you go to the 15-minute time frame, there's something that is funny. Let me move to 5-minute time frame so that I can make it clear. 5-minute time frame so that I can make it even more clearer. Yes, there's something happening here. Yeah, so if you go down here, you can see the market has closed. You can see this particular candle here. This particular candle, the market came down and rejected immediately, then finally pushed low. What does that one mean? The first scenario that the market pushed down, it means that the zone around here where the market reacted from was strong and it rejected immediately. You can also confirm from the previous candle here and right here. So the place where the market gained the momentum to push it low, that is where we are going to use as our order block. So we have our order block around that zone. However, we can redefine it into a smaller OB. So we can use the extreme order block, which is up there. I said it should be a bearish engulfing or bullish engulfing for either directions. So we have that bearish engulfing sentiment. Then the market did not come to the actual order block, this first one, before selling down. However, we had the second breakout structure. I love using 15 time frame, so just use that. We have the second breakout structure. So in our second breakout structure, I'm also going to look at the order blocks and the fulfillment. If it is failed, if it is fulfilled, we are not going to use it. If it is mitigated, we are not going to use it. So we go to the first. Here we have a bearish engulfing candle right here. So we have this right here, and this is what we are supposed to use our OB. So in case the market comes there, we don't consider it valid anymore. But if you look very closely, you're going to see this one candle, this 1 week right here that comes and indicators on the market pushes to the lower side. So we are going to look at the next available OB, and the next available OB is right here. So this is the next available order block. So in case the market comes up there, we are going to use it as our entry point. Now the market breaks structure to the lower side, and unfortunately it does not move to our extreme order block. So you be patient. You don't force the entries. You don't force the entries in the middle of nowhere. You wait for the market to come and mitigate that particular order block. So here we have this shadow and we have this bearish engulfing candle. So we're going to use the shadow because that is if you look at a lower time frame, let's say the 5-minute time frame, you're going to see something else. Let us check. If you check, yeah, it is something else. It has some candles that had to be mitigated. It's not just a up movement, then the market sells immediately, but it is having some candles down there. So we are also going to use that as our order block, but we include the candle that was engulfed. So that becomes our next available order block. And when the market comes there, this trade I posted it my reels there, the short reel, the before and after, you saw it. So this, the market comes and you can see the market swiftly sells to the lower side. Then we are continuing that movement because the overall trend is bearish, so we're just looking for the bearish trades. So we have our next break of structure right here. So after that, we are going to look at the order blocks and how they've been getting. And my order block is always bearish engulfed candle. So we are going to look at the bearish engulfing, which is here, and that is what I'm using as my OB. I'm not using anything else. So as we can see, the market comes to that order block and it takes the calls immediately. It doesn't waste time, and your stop loss should just be few pips above the order block, not above the swing point, above the order block. Because once the market closes above the order block, it means that order block is no longer valid based on the strategy that I'm using to trade GBP JPY. So currently the market is bearish and we are moving down. So let me give you an insight on the order block that we're going to use to continue with the bearish trend. And I said that we are looking for the bearish engulf candles only for our order blocks. So if you move from the top, we don't have any here, we don't have any, we don't have any, we have one here, but this one's already mitigated. So if we have such a scenario where an order block is already mitigated, then we would rather go to a lower time frame and confirm any available order block with the same pattern, that is the bearish engulfing candle. So we have the first order block here. We have the first order block here, and it seems as if it is already mitigated, but we can still reconsider it. Then if we move further low, we have these two small order blocks, which is right here. So this one is where we can consider our entry point for the coming week. So we can either look up here, but up there is already mitigated, so low chances of the market coming back huko juu. So we just look for the market to come at least to this zone, then we take our sales, and your stop loss should be just a few pips below the order block. Thank you very much, and my name is Blue Wave Profit. So if you want to get full mentorship, full course on smart money concepts, and to be a profitable trader, kindly reach out to me through my WhatsApp number that I'm going to put in my bio. Thank you.